Hello, this is Jeff Evans going through the AAT sample assessment. This is sample 2 on the cost of revenues assessment, so managing accounting, so the costings unit on the level 3 advanced diploma. So first question, it says that Pace Haulage has chosen a new brake pad, BP371, for the servicing of its fleet vehicles from beginning of December. For its management accounts, PHL has always used LIFO, last in first out method. The inventory record for BP371 shows the following receipts into the stores during December. So on the 1st of December they got 120 pads received in to the stores, £16 each, which is 1,920. 7th of December 150 pads, and on the 14th 190 pads. So it says that PHL is considering whether to use FIFO as an alternative to LIFO for the management of its accounts. So it said calculate the cost of issuing 350 pads to the vehicle maintenance and repairs department on the 18th of December and the inventory balance of the issue using FIFO first in first out and last in first out. Okay, so what we're basically looking at is what's the cost of issuing 350 pads and the closing inventory using first in first out and last in first out. So one of the things I always say to the students is always make sure you do the totals first, so you know how many units came in all together, so how many pads, and also what the total cost of those pads are, because you'll need to know what the closing figure is. So once you've worked out the cost of the issue, you can take off the total amount of brake pads that have come in, and that will give you the closing stock, or the closing stock figure. Okay, so let's make a start. So with reference to the amount of pads, it's 460 pads at a total cost of 7,580, all of those added together. So far as first in first out is concerned, so this is the stock that came in first. So we've got 120 of those at £16, which is 1920. We've got 150 at 16.20, but we still need another 80 units. So there's 120, 150 is 270, but we still need another 80 units. So we've used all these up now, so we're going to have to take them from the £17 one, so those that came in on the 14th. So that, as I say, you got 1,920 plus 2,430, and you work those out. Then you go 80 times 17, which gives you 1,360. So therefore, the total cost of the value of the issue would be 5,710. Okay. I did say to add up your total cost, so the cost of all of the pads that came in December was 7,580. We've issued out 5,710, so that leaves us with a closing figure, or a closing balance, of 1,870. That's FIFO. As far as LIFO is concerned, so last in first out, so again we're still issuing out 350 brake pads, but this time we're going from the last in first out. So the stock that came in last was 14th of December. So we go 150 at £17, which is 3230. 150 at that price, so you got 190, 290. So you got 340 pads at that point out of the 14th and 7th of December stock, but you still need another 10 pads to make it up to 350. So you take it from the 1st of December stock that came in at £16. So therefore you've got 3230, 2430, and then the 10 times 16, which is 160, which gives you the value of the issue equals 5,820. Your closing stock figure this time is your 7,580 minus the issue, 5,820, gives us a closing balance of 1,760. Okay. So again, it's always important to do your totals so you can work out what your closing balance is once you've worked out the value of your issue. Just out of interest, I mean, we don't have to do it for this particular question, but if you had to do it through AVCO, so the average, you would work out the average figure. So you do the average, which would be, so your total value of the stock that came in is 7,580, and you got 460 units. So therefore you divide the total cost by the amount of units that came in, which would give you an average cost per unit, and you just simply multiply that by 350. Okay. The next question says complete the sentence below with regard to first in first out as a method of pricing inventory. It said the FIFO method for costing issues always mean that the inventory is physically on a rotating basis, so that the first inventory is the first inventory issued. Let's see what that says. On a rotating basis, so that the first inventory in is the first inventory issued. Okay, it's not changing that much, has it? Okay, so will it or will it not? What I was saying to the students when we were discussing this is that first in first out does mean that the stock that's issued first is the stock that goes out. But I think the key thing about that question is the word always, because it's not always the case. And I think from my time in retail, I used to get really annoyed when the staff used to fill the crisps up from the front because they were pushing all the old stock to the back. So it's not always the case. Okay, so will not. Okay, next question. Okay, so this one says a number of transactions took place during December that need to be entered into the cost accounting records of Pace Haulage Limited. It said the following cost accounting codes are used. So bank 4,000, purchase ledger control account 4,500, wages control 5,000, and so on and so forth. So you can see what they are. And it says identify the correct cost accounting entry for each of the following 4 transactions which took place during December. So the first one says a return of 20 emission prevention filters cost at £340 each from maintenance to the stores. Okay, so it's gone from the maintenance to the stores, so we're going to take it out of maintenance and put it back into the stores. So far as this particular question is concerned, let's have a look. So 20 times 340 is £6,800. So £6,800. And the debit, so what was said, is that it's going from maintenance to the stores. So it's going into the stores, so we're going to debit the stores. So stock going in is a debit, stock going out is a credit. And it is coming from maintenance, so we're going to take it out of maintenance, which is 7,500. Okay, so again the cost to maintenance would be a debit, but this time it's coming out of maintenance because it's going to the stores. You need to know your debits and your credits. This one says the payment to a supplier for 10 forward facing cameras. What does the business do? So they're a haulage business. Okay, so it says payment to the supplier for 10 forward facing cameras for installation into the vehicle cabs. It said these cameras cost £945 and were purchased on 28 days credit terms. So what it's saying is that we're paying the supplier, okay, for the cameras that we purchased on credit. Okay, so what we originally had, say this example, so £945 each times 10 is 9,450. So 9,450. So this would have been recorded so far as the purchase ledger control account. It would have been a credit of 9,450 when they were purchased on credit. Okay. whereas this time it says that we're paying the supplier. Okay, so as I was saying, money out of the bank is a credit, money in the bank is a debit. So we're basically paying them. So we're going to credit the bank, which is code £4,000, and this time we're going to debit the purchase ledger control account because we're paying off some of the money that we owe our suppliers. So the purchase ledger control account is 4,500. Okay. Payment of driver's wages. So the driver's wages for the week amount to 2,700. So 2,700 is the payment. 2,700 hours at £19.50 an hour. So the total cost is 52,650. Let's put the money in first. So 52,650. 52,650. Okay, and what we're doing, so we're payment of the driver's wages. So we're going to, I said money out the bank, we said as a credit, so we're going to credit the bank for £4,000, and we're going to debit, so it's wages, so we're going to debit the wages control account. Back to your bookkeeping controls on level 2, where you had your wages control account. So you're going to debit your wages control account, which is code 5,000. And the final one, it said issue of diesel fuel, 2010 litres at £1.20 to the two profit centres, UK services and international services. So let's have a look. Well, the total amount anyway, so let's put the monetary amount in, is 2,412. 2,412. So issue of diesel, so it looks like it's going to be coming out of the stores. Yep. So we're going to credit the stores, and this time it is for, it's a direct cost because I say it's the fuel, so it's a haulage company, so obviously fuel is a direct cost as far as they're concerned, a variable cost even. So therefore we're going to credit the stores, which was 8,000, and we're going to debit the direct costs, which are 6,000. Okay, so direct cost. Okay, so that completes question 2. And that's question 3. Okay, so it says Pace Haulage employs a team of 6 instructors who assess employees' driving skills on a regular basis and undertake training sessions for drivers where indicated by the onboard computers fitted on the vehicles. It said the instructors are paid a basic rate of £18 per hour, and any overtime is paid at the following rates. So overtime rate 1, so it's basic pay plus 25%, which is 18 times 1.25, gives you £22.50. Again, I tend to write it in here just so I can remember. And the overtime rate plus 50% is your £18 plus your £9, so 50% of that means it's £27 is the overtime rate for overtime 2. It also says that PHL set a target for their employee driving skills assessments, and training sessions for each month. A bonus of 100% of the basic hourly rate is payable for every assessment or training session in excess of its target. Okay, so it said the target for December for instructors working as a team of 210 assessments and 50 training sessions. Okay, it said the team completed 218 assessments, so 8 more than they budgeted for, and 62 training sessions, which is 12 more than they budgeted for. So they've basically done 20 more assessments than they expected, than the target. So we might as well do that now whilst we're at it. So there's 20 sessions, and it tells us that it's paid at 100% of the basic hourly rate, which is £18. So let's put that figure in. So we've got £18 times 20, which gives us a bonus of £360. Okay. We'll then go back and fill in the labour costs. So basic pay, so £750 times 18 equals 13,500. Overtime rate 1 is £14 times the £22.50, which gives us £945. And then finally, the overtime rate for number 30 is 30 hours times basic pay plus 50%, which is £27. So 30 times 27 is £810. So therefore that gives a total cost, so all of these, total cost before bonus equals £15,255. Including the bonus is £15,615. Okay? So you have to read the question carefully. RTFQ, as we say. Okay, next one says calculate the average labour rate inclusive of bonus, which is 15,615, for each driving instructor in the month of December. So we're going to do it to 2 decimal places. Okay, let's read that again. So the average labour rate per hour, including bonuses, for each driving instructor in the month of December. So we're going to do the average total labour rate per hour inclusive of bonus in the month of December. Okay. So we've got £15,615, so it's the average labour rate, and they did 822 hours. So £15,615 divided by the 822 hours gives us an average total labour rate of £19 per hour. I've done it to 2 decimal places as well, so you lose a mark if you don't. The next one says, so the total pay, including bonus, which is this figure here, for each driving instructor for December was, so let's have a look, so how many driving instructors have we got? So 15,615, and it tells us that they've got 6. So there's 6 driving instructors. So we divide the 15,615 by the 6 drivers, which means that each of them will get £2,602, £2,602 and 50 pence. You can check that by multiplying it by 6, will take you back to the total amounts before the bonus. And then this one says the final part of this total, the bonus payable for each team member. So same principle, so this time the bonus was £360 and there were 6 members of staff, or 6 in the team, which is £60 each is the value of the bonus. Straightforward enough, hopefully. Just need to read the question. Make sure you do the hourly rates properly. Okay. So this one is the allocation, apportion and absorption question. So it says that actually we're only doing the allocation, apportionment and reapportion for this particular one. So it says that Pace Hall is limited. It's preparing its budgets for the first quarter of next year. So these are budgeted. Remember, the following costs are relevant. So you got depreciation charge on the vehicles of £168,000. You've got your rent and rates and insurance of £68,000. Supervisors' wages, so all these overheads are £65,000, and then you've got light, heat and power of £17,000. So we're going to work out all of these costs and put them in this particular table here. So it says use the following table to allocate or apportion the overheads using the appropriate basis. Okay. Some things to note. Okay, so when it comes to depreciation, and in a minute we'll have to look at, so how's that depreciation charge apportioned? Well, we always tend to do depreciation on the basis of the carrying amount. Okay, so just while we're on, I'll just show you how we do it. So this one says we've got depreciation charge of £168,000. So £168,000 is the depreciation charge. I'll tell you what's put them all at the same time. We've got rent and rates of 68,000. Supervisors' wages is 65,000. Indirect labour isn't here, so let's have a look. We've got indirect labour, so it tells us what the costs here. So these are, we can allocate these because it tells us what the costs are. So it tells that vehicle maintenance is 53,500, fuel and parts 27,600, and general admin is 43,400. So we can allocate those because it tells us what they are, so we can allocate them. So let's have a look. So we're saying that vehicle maintenance is 53,500, fuel and parts is 27,600, and general administration is 43,400. I'll tell you that gives you a total cost of 124,500. And the final one is for heat and power, and heat and power is £17,000. Okay. Okay, so I'll go through each of them and explain. So when it comes to depreciation charge, we need to determine what is the basis of apportionment. So how are we going to apportion them accordingly? Okay. So when it comes to depreciation, I was saying before, we always do depreciation on the carrying value. So what I do say to the students is just do the totals of each of these bases of apportionments, I suppose, and because it's easy then to work out. So what you've got here, you've got of the £3 million of the vehicles, which those are, so 1250 plus 1750 means we've got a carrying amount. We've got £3 million of the vehicles, of which 1.25 million of those are in UK services, 1.75 million in international services. So we basically do it proportionately, or we allocate that overhead proportionately to the carrying amount in those particular areas. So for example, 168,000, which is the overhead, okay, multiplied by 1250 divided by 3 million will give you what the overhead, or what the cost will be so far as UK services. So imagine there's 3 million there. For international services, again it's 168,000, but this time we're going to multiply it by 1750 and then divide it by 3 million. Okay, so let me show you. So the basis of apportionment is done on the carrying amounts, which is only fair because obviously depreciation is based on the the carrying value, or the net book value of those particular assets that we've got. So therefore that works out to be, so 1250 divided by 3 million multiplied by 168,000 gives us £70,000. So £70,000 is to UK services, and the remaining balance is £98,000. Okay, again that was the 1750 divided by 3 million multiplied by 668,000 gives us 98,000. So when you're doing it proportionately, And again, as I always say, it's only fair that international services pay more of the depreciation charge because they've got more, they've got more vehicles, or the carrying amount of their vehicles is more in that particular cost centre. Okay. Rent rates and insurance. So rent rates and insurance we always tend to do on the basis of floor area. Okay. So rent and rates is done on floor area, as is light, heat and power. Okay, and again when you think about it, it's only fair, because if you've got a building, like if you imagine that this screen here was a building and half of this was taken up by one of the production centres or one of the cost centres, then it's only fair that they pay that proportion of the rent and rates, insurance or heat and power. So for this particular one, we've got £68,000 worth of overhead that needs to be apportioned on the basis of floor area. Okay, so again, as I said before, if you add up the amount of space, so the total floor area of the building is 340,000. So 340,000 is the total floor area. Yeah. UK services have got £80,000 of the £340,000 of floor area. So again, in proportion, that's what they would pay as far as the overhead's concerned. So the same as we did before. So 80,000 divided by 340,000 multiplied by 68,000, and that is the how it's apportioned to the UK services, which is £16,000. Okay. The 120,000 square metres of the 340,000 square metres, again multiplied by 68,000, means that the actual allocation will be 24,000 to international services. 56,000 of the 340,000 times 68,000 means that vehicle repairs is 11,200, 8,800 to fuel and parts, and then general admin is 8,000. Okay, again, all these added together should equal 68,000. Supervisors' wages, it tells us here that supervisors' wages are apportioned on the basis of driver labour costs. So you've got driver labour costs, and obviously the drivers are only in the profit centres here. So same situation or same process. So there's 284, so £520,000 of the cost of the driver labour hours, of which 240 of those are taken up by UK services. So the same process is, so the total cost overall is 65,000. 240,000 of the 520,000 is taken up by the UK services. So then we multiply that by the 65,000, and that will give us the cost. So for supervisors' wages in UK services, so 240,000 divided by 520 multiplied by 65,000 gives us a cost of £30,000. And for international services, £35,000. Okay. And then finally, for light, heat and power, which again is done on the basis of floor area. So 80,000 divided by 340,000, and this time it's multiplied by 17,000, because that is how it's apportioned. So same as we did for the first one. So we've got 4,000, which is 80,000 divided by 340 multiplied by 17 is 4,000. We've got 6,000, 2,800, 2,200, and 2,000. Okay, again that 2,000, just to remind you, floor area, so 40,000 divided by 340,000 times 17 will give you 2,000. Hope I'm not going on too much about that, but some students do struggle with how to apportion the overheads. Okay, so now we've allocated when we can allocate, we've apportioned using the fairest method. So now we're going to add up all of those costs, and the whole sort of focus of this particular question is we want to get rid of all of the overheads in the non-production centres, such as vehicle maintenance, stores and general admin, and we want to reapportion them into the UK services and international services. Okay, it's on that point, once we've worked out what the total budgeted overheads are going to be, is we can then start talking about the overhead absorption rate. So how much do we need to charge just to cover our overheads? So the first thing we're going to do is to do the totals. So 120,000, 163,000, 67,500, 38,600, 53,400, and 44. So that's 442,000 in total. 442,500. Okay. Right. Okay. So we've allocated, apportioned, and we've got these total costs. So now the whole focus, or the thing we're going to do now, is to reapportion these overheads of vehicle maintenance, fuel and stores, so 38,600, 53,400, and we're going to reapportion them in the method that it tells us in the question. Okay, and this one does say, let's see. Okay, it says, I suppose I'll just read this part here because it's important. Overheads are allocated and apportioned using the most appropriate basis, which is what we've done. And then it says the total overheads of the support cost centres are then reapportioned to the two profit centres. So again, using the direct method, I'll explain that in a second. So we're basically going to reapportion the support cost centres into the two profit centres using what they call the direct method, which is basically saying that vehicle maintenance, these overheads, we're going to apportion these directly into the two profit centres. You can get a situation where it says where there's a reciprocal method, which is where vehicle maintenance might maintain some of the machinery in fuels and stores. So you get situations where some of the overheads are then apportioned into the support centres, and you carry on doing the same process, but this one is just the direct method. So this one tells us that the maintenance, 55% of maintenance department's time is spent in UK services. So again, it's only fair that this 67,500 is apportioned mostly to the UK services, because their machines need more maintenance. So 55% of their time is in UK services, so it's only fair that they have more of that overhead. So you simply go 67,500 times 55% gives you 37,125, and the remaining 45% is 30,375. Okay. Stores, it said the stores are apportioned between the two profit centres on the basis of the number of store requisitions, and again it seems sensible. So it's done on fuel and stores and part. So you got 38,600 is the overhead for fuel and parts. So fuel and parts in the stores. So let's have the material requisitions we've got. There are 960 material requisitions in UK services, and 1,040 in international services. So again, the total was 2,000 material requisitions or stores requisition. So it's only fair that international services who had more stock or requisition more stock should pay most of that overhead. Same process, so 960 divided by 2,000 multiplied by the overhead tells us how we allocate it or we reapportion it. So 960 divided by 2,000 multiplied by 38,600 gives us 18,528. For international services, 1,040 divided by 2,000 times the overhead gives us 20,072. General admin, it said it's apportioned to the two profit centres, general admin costs are apportioned equally between the two profit centres. 18 marks this question. Okay, so it's worthwhile practicing. There's lots of sample assessments on the AT website, so keep practicing them. 2010, 2013 standards. So this was the 53,400 is just split equally, which is 26,700, 26,700, which therefore gives us total overheads for the profit centres would be 202,353. And you got 240,147. Okay. I get a little bit frustrated at this point because on the old AAT assessments you used to use these figures to work out what the overhead absorption rate was going to be. And I'll give you just a very brief example. Sometimes it will tell you that UK services might be, as an example, very labour intensive. Let's say 100,000 labour hours per year. So you would divide the overhead by the hours to work out your overhead absorption rate. So remember, your overhead absorption rate is the rate that you need to add to your direct costs to work out your overall cost. Yeah, so your own cost per unit. And so far as international services, it might say it's very machine intensive, and we're doing 50,000 machine hours a year. So again, you would divide the 240,000 divided by the 50,000. That would give you an overhead absorption rate. So the rate that you would need to charge per hour, per machine hour, or per labour hour, just to cover your overheads. Okay. Good. And the next question. Okay, so again, so this is sort of like a separate question because again, some of the overheads used to carry across from the previous question, but not anymore. Anyway, so it said Pace Haulage wants to review budget against performance for the last quarter. So your budgeted and actual data is presented below. So your budgeted overheads for UK services was 320,150, and the expected or your budgeted miles was 8,425. The actual miles was 8,575. Vehicle repairs, budgeted overheads were expected to be 160,160, and they expected to have 4,004 machine hours. Like I said before, to work out the overhead absorption rate, you've got your budgeted overhead divided by your budgeted machine, so budgeted miles in this particular example. So it tells us, so calculate the budgeted overhead absorption rate, so the rate that you need to cover the overheads that we used for UK Services Profit Centre and for Vehicle Maintenance Cost Centre. So for UK Services you go 320,150 divided by the budgeted miles, which gives us a figure of £38. So our overhead absorption rate is £38 for every hour. Sorry, I keep saying hours. For every mile we need to charge our customers £38 just to cover our overheads, just to cover those overheads that we'd budgeted for. For vehicle maintenance, so it's done on machine hours. So for every machine hour, we want to work out how much do we need to charge per machine hour just to cover our overheads. And this one is similar. So 160,160 divided by budgeted machine hours of 4,004 means that we need to charge £40 every machine hour just to cover our overheads. Okay, that will be on top of any direct costs we've got. So what we would charge them for maintenance hours anyway, we just need to add the £40 on top of that to cover the overheads. Okay. Next question says, identify the appropriate budget over absorption rate for UK services. Profit centre. Does this do anything? It just says centre. It's given to you there anyway. So for this one, it is obviously budgeted miles and machine hours for vehicle repairs. It says the data for the last quarter in the table above shows the actual miles travelled and maintenance hours worked as well as budgeted. If the value of the actual overheads incurred last quarter exceeded the overheads absorbed for the quarter, PHL will have, let's have again. So if the actual overheads incurred last quarter exceeded the overheads absorbed. So if the overheads were more than those were absorbed, so let's have a look. Let's read that again. So the actual overheads incurred exceeded the overhead absorbed. So we've not absorbed as much as we should have done. So we've under absorbed because the overheads turned out to be more than what we'd budgeted for. That's what we're saying. So the overhead absorption rate wasn't enough to cover the actual overheads. Okay. So therefore we've under absorbed, which will be an expense. Okay. Because we still have to pay it. Whereas the opposite here, it says an overabsorption. So if we've overabsorbed, okay, we've charged too much, will be credited to the profit loss account, and this will decrease the expenses and increase the profits. I'll explain that. So what we're saying is, so let's say for instance with this example here, that we've charged £40 an hour to cover our overheads, okay, but it turns out to be more. So look, I mean, let's say that the overheads were a lot more than what we expected, and we've only charged £40, then we've not absorbed as much as we should have done, so we've under absorbed. Okay, whereas equally the other thing could happen is where you've actually over absorbed, where you've charged too much because let's say your overheads for vehicle maintenance came in, let's say £150,000, yeah, and we've charged £40 an hour based on those machine hours, then it means that we've charged too we've over absorbed. Okay, I'll do this in two parts because otherwise we'll go on too long. So I'll finish this question and then I'll complete the rest of it in a separate video so you can have a go and you can practice. Okay. Again, the key thing about this question is really reading it. So again, I'll do the calculations, but you need to work through it yourself so that you understand it. Okay. So it says Pace Haulage Limited is planning 3 new haulage route contracts for next quarter. RTU 13, RTU 14, RTU 15. He said it's gathered the following data to put together forecasts for the routes. He said the contract route for RTU 13 is for 4,000 miles. Okay, so the contract is for 4,000 miles at a charge rate of £200. So 4,000 miles times £200 will give us revenue of 800,000. So £200 times 4,000 gives us 800,000. Okay. It then tells us the contract route for R214 is 25% more than RTU13. So it's 25% more than RTU13. So 4,000 times 1.25 gives us 5,000 contract miles. Let's just do the other one. For RT15 it's 20% more than R213. So 4,000 times 20% or times 1.2 gives us 4,800 miles. The revenue for this one, so it's charged out at 25% less than the £200 a mile. So therefore you go with the £200 times 0.75, 75%, will therefore give you whatever that figure turns out to be, but it gives you revenue of 750,000, and this is 40% less than R214. Okay, so £200 a mile, which it was for this one, it's 40% less. So if you do times 0.6 or 60%, that will give you what the cost per mile is. So 60% of that times 4,800 will give you 576. Okay. Your variable cost, it said your variable cost is £75 per mile for RT13, 20% more per mile for R214 and R215. Sorry, 13. Let's do that again. The variable costs are £75 per mile for R213. So 75 times 4,000 gives us 300,000. For R214, variable cost of 20% more per mile for RTU than R2. So you do £75 times 1.2 will give you the 20% extra, and multiply that by the 5,000, which gives you 450. Excuse me. For R215, it says R215 are £5 more per mile than R213. So that's £205, isn't it? So variable cost of £5 per mile more than R213, which was 75, so that's £80 a mile. So 80 times 4,800 gives us 384,000. Okay. So we've got our revenue and we've got our variable costs. So what we're required to do is, let's have a look, is to work out, required to complete the table below to show the forecast contribution and profit for routes R2, 13, 14 and 15 for the next quarter. Okay, so you've got your sales revenue of 800,000 minus your variable costs, gives you a contribution of 200,000. For R214, sales revenue is 750, variable cost 450, which gives us a contribution of 300,000. And for R215, 576 minus 384 gives us 192, so contribution. Okay, selling price minus variable cost, as you know, when it comes to overall. So this is on revenue. So then it tells us that our fixed costs are £500,000 and to be shared out 40% to RT13, 35% to 14 and 25% to R215. So that gives us 200,000. So 500,000 times 0.4 or 40% is 200,000. 175,000 to R214 and 125 to R215. So therefore we can work out our profits or our contribution. I've not done that right, have I? That's 500, sorry. Delete. That should be 500. 800 minus 3 is 500, yeah? So £500,000 contribution minus the fixed costs gives us £300,000 profit. 300,000 contribution minus the fixed cost of 175 gives us 125, and 192 minus 125 gives us 67. Okay, nearly done. This one says that PHL monitors and reviews performance of all its contracts. Actual performance is compared against forecast, and responsible managers will be sent reports to review and to act upon. It says the contracts manager will be sent overall performance reports to monitor the revenue routes for R213 and R214. Okay. Key thing about this question, it's the revenue. Okay, so remember again, going back to elements of costing on level 2. So you've got those various, you remember you had the investment centres, you had the profit centres and the cost centres. So remember that profit centres generate revenue, but they also incur costs. So this is R213 and R214. So again, so they generate revenue, but they also have costs as well. So they're what's known as a profit centre, because a profit centre, I say, generates a profit, so revenue, and has some costs as well. Whereas the maintenance manager will be sent reports on maintenance for the contracts that he or she is the relevant manager for. Okay, and again, when you looked at the type of cost centre or the different centres, and for this one, it's a cost centre because there is no revenue. It's just purely cost. A bit like the distribution centre for the supermarkets. They don't sell from there, they just incur costs. And then finally, the reports on the return of capital employed on each contract are sent to, okay, so the reports on return of capital employed, which is investment, so they're sent to the investment centre manager. Just familiarise yourself with the profit centre, cost centre and investment centres. Yeah, so profit centre generates revenue and incurs cost, whereas the cost centre just incurs the cost without making any profit. No ethics. So accounting technicians are required to act ethically. It says, looking at the information in part A, okay, indicate how you would react to the following scenarios by answering yes or no in the table below. So the first one says you've been asked to change the revenue figures by a colleague to increase profit without any data for this or managerial authorization. Would you? I know that you're all very honest people, so I know what the answer to that particular question will be. So, no. Okay. A friend of yours works for a rival company and has asked for a copy of the above forecasts so that the company can put in a bid. So would you do this? Well, absolutely not. So again, it's not professional behaviour, and it's also confidential information, isn't it? So again, no. You discover a mistake that you made that had significant impact upon profit. Do you report it to the manager, or do you try and hide it and run away? You would obviously report it to the manager. And then it says, when drawing up forecasts, you see that one of the routes makes less profit than the other route. You do not understand why this is. Do you ask your manager to explain? Of course you would. So when drawing up the forecast, you see that one of the routes makes less profit than the other route. You don't understand why this is so. Do you ask your manager to explain? Well, of course you could. Just so that you understand for next time. Okay? Okay, I did say I'm just going to do half of it for now. So we've done 1.1 to 1.6, and I'll produce a separate video for 1.7 to 1.10, purely to give you time to work through it so you can understand it. So, the very best of luck.